Welcome back. You're still tuned into Halftime Report, and the Indian real estate market is on a roll with private equity investments reaching a record $1.7 billion. This is in the first half of 2024. This is a 42% increase on a YY basis as per a report by Savills. To discuss this and more, we have Arvind Nandan, the MD Research and Consulting, Savills India, and Gaurav Karnik, the real estate national leader at EY India. Gentlemen, thank you so much for joining us today, and we've been seeing great numbers come by in the real estate space. Arvind, let me come to you first up. What explains this trend that we are seeing in the real estate space, this big investment that's come by? Which segment are you seeing it mostly in right now?
That's very interesting. Actually, there is a sort of recovery taking place in investments in real estate. We had seen a peak in 2019, then it dropped, it became half in 2021, 22, recovered a little, and this year it's been going up. The main thing is that the interest has gotten a revival in the traditional core assets, office assets mainly, but also notably in the residential segment, which had nearly died down, 2 years ago. So there is a very smart recovery in residential assets as well as in office. There are a few other sectors as well, which are doing well, not as big. So for example, there is interest in warehousing, data centers, and few other sunrise sectors. But that sums it up actually.
So if you could give us a sense then, what are the differences in the spreads between the rental yields that you get on commercial versus residential versus warehouses, etc. What explains this, reinvigorated interest in the residential asset, and what one can expect in the second half of this year?
So look, office has gotten established, so it's been doing well. It's, it used to be about 9.5. It's still doing about 7.5, 8.5 or so, which is, practically in an accepted range. Residential traditionally has been low.
Yes.
But there are newer things like structured debt which is taking place, which is also creating interest. I don't know if there was a very major transaction by Mapletree in Bangalore, which became a news. Yet another event. So it is those things which are creating interest in residential, not purely the annual yield, which would still be very low if you look at other segments. Warehousing, on the other hand, is delivering some very good yields at the moment. There are not many examples, but the interest is high because it's a new segment. It's something which comes at a much lower cost and is a growing segment. So that again is expected to give you about 7.5 or so kind of a return. Ballpark, these are the numbers and these are the reasons where, the interest is getting evoked from.
That's very interesting. New segments that investors are looking at as well. Let's get Gaurav Karnik as well in the discussion. Gaurav, thank you so much for joining us. Well, can you explain what's happening here? And also in terms of numbers, the May 2024 number, according to the report, is $2.5 billion. Where is it going, and is it the highest that we are seeing in the real estate space? And is it investments only by P plus VCs, or there are more parties that are investing here?
Yeah, so I think like Arvind already mentioned, the real estate sector is really seeing a real revival of the last 3-4 years. If I look at residential, from the time of COVID, we have seen a real boom in the residential market because people really want to buy houses and have at least one home with them. And people who have houses, let's say 1 bedroom or 2 bedroom, they're going to 3 and 4. And so that is really boomed. There's really an end user segment which is taking investments in the residential space. And if you see Gurgaon or you see Mumbai or Bangalore, the prices are really going up because there is a significant demand. And if you see any of the launches by the developers, they are being picked up in 2-3 days. So I think some of the demand on the residential side is clearly on the end use. People are looking to buy houses and to get that into their portfolio. The other part which we are seeing is on the commercial office space is that, unlike the rest of the world, a lot of the people here in India are gone back to work. If you look at America or Europe, they are still working on a very hybrid model where, people go to work twice or thrice a week. And whereas in India, there's a lot more people coming to work in the week. So there is a lot more confidence in the commercial assets. So, the Waverock asset in Hyderabad, which was bought by GIC and Xander, which is the second time it's been purchased. So that shows confidence in the commercial market. There is also the purchase by Brookfield of, Bharti's interest in their joint venture and basically making it 100% JV. And I think one of the points which is driving commercial or even warehousing, and I'll come to warehousing later, is that there is an exit in the form of the REIT, which is there. So that is giving a lot of confidence to foreign investors or investors to put money into such income yielding assets, because now clearly there is a way for them to get an exit other than just pushing it on to the next private equity player. And if I look at warehousing, the largest transaction was in the Reliance the warehousing assets, where RDI and KKR have put in money. So if I look at the type of people who are investing in India, which is not just private equity, is also the sovereign wealth funds and pension funds. And along with that, there's a large domestic pool of capital, which if you see the AIF space, there is a lot of domestic money which is being raised in the AIF space, and that is being deployed in the real estate market.
You preempted my question on the exit with the REIT one. That was rather insightful, Gaurav. I just wanted your thoughts on going back to the returns bit. I was asking him about the yield, the rental yield differences between the various kinds of assets, but that's not the only one. There is capital gains as well. And you said that house prices have increased. So on a total returns basis, what is the typical sort of number that one can look at across all forms of real estate? And, is there any exit apart from looking for another PE? One tries to figure, because liquidity risk has often been associated with real estate investing.
Right. So if I look at, the various yields is different. So if you look at residential, the residential yield on rental is very low. Whereas if you look at commercial, it's much higher. So if you look at residential, it'll be after post-tax is something, 2-3% or sub 3%. Whereas if you look at commercial, it'll be in excess of 10%. If you look at the way you're exiting, it is obviously for people who are developers, they have an option if on the commercial, on the warehousing side, to either do a REIT or InvIT. And that can be, REIT is a public issue, which brings in a lot of investors. The InvIT can be privately placed and then publicly listed. So the InvIT and REIT definitely gives you a clear exit. And the other type of investors, I guess, is the HNIs who have put money into the domestic AIFs. And that clearly gives another pool of capital, which is there to purchase certain assets. So there are, a bunch of set of buyers, whether it's the InvITs, REITs, or it is the, private equity and sovereign wealth funds who are there along with the pension funds from a foreign perspective who are, investing in this market. And even the large private equity players, their LPs are typically the sovereigns and pensions as well.
Okay. Arvind, now what next? You said 2019 is when the numbers peaked. We have seen $6 billion as well in terms of PE investments. Do you think it'll take a lot of time before we get back to that number? What is the sustainable rate that the industry is expecting now?
Yeah, so not a lot of time. But, in this year, we've already seen a significant jump first half to first half on an annual basis. End of this year should again give us a substantial jump over the last year. So I am looking at something like 5 or 5+ billion in this year. So we're not yet getting up to 6 or 6.5. But if things do not change in an unprecedented manner next year is when we should be able to get back to that peak, is my guess. But there are so many other conditions that you need to fulfill in order to for these things to happen. So if things do not change as they are today, I think next year is when we should be able to get back to that peak. As of now, it looks like a good environment. We are climbing in a steady manner, but not yet hitting that peak.
All right, let's let Gaurav have the final word here as well. Gaurav, what are you hearing? The second half of this year, what's your guess?
I guess it should pick up in the second half and early next year. I think that's clearly the way the markets are looking. I think one of the drivers or, one of the things which are impacting investments in India or in the emerging markets is the interest rates overseas. So if there is a, some downward trend in the interest rates, say in the US or in Europe, that will clearly free up more capital for investments. And so hopefully by the end of the year, there would be less inflation in the US, or there would be better numbers, which would, allow them to reduce the interest rates. And that would clearly be an indicator or way to getting money back into the emerging markets, including India.
Okay, all right. Gentlemen, it was a pleasure speaking with the two of you. Thank you so much for joining us today and throwing the spotlight on what's happening with PE investments in the realty space. It's been doing really well in stock markets in terms of stock market investments, and a lot of interest coming in from private equity and venture capital as well. Time for a break now. Jay Thakkar of ICICI Securities will join in with some trading strategies on the other side. Stay tuned.